Hello everyone, welcome back to the artoftrading.net. This is Trader Stewie with you here with another video. Today I just want to go over a question which I got a lot last week. I asked members, if they can email me and ask just questions about, stuff that they're unsure about, I just had them, like tell me what they would like me to do a video topic on. So the most popular question was how to use it, like momentum indicators like the RSI or the MACD. That was the question I got a lot. I got it from like 3 or 4 different people, so I just want to do a video today and just kind of go over it and discuss exactly how I personally use momentum indicators. And the momentum indicators that I prefer, and everyone has their own set of tools that they use. Everyone has their own toolbox that they go to, and but just remember that all these indicators, whether you use the MACD, whether you use the RSI, whatever indicator you use, just remember it's always good to use it in coordination with with price, with volume, with sentiment. You have to, so no one indicator is going to be successful on its own. It has to be used in conjunction with many other things to come together, and then hopefully give you a decent trading opportunity, a decent trading setup. But let's just get straight to it, guys. I want to go over and talk exactly how I personally like to use the MACD and the RSI. I'm not gonna get into the mathematical equations of how RSI, which is the relative strength index, and then the MACD, which is the moving average convergence divergence. If you wanna know the mathematics and all the geeky stuff behind how this stuff is calculated, you just Google it online, or you can go to investopedia.com, and there's all these explanations are there. For me, just keep it simple, and just know that these are momentum indicators. Okay, so let's just get straight to it. As you can see, guys, here's an SPY chart, SPY chart this is the 30-minute chart, and I like to use the MACD and RSI to track mostly. I'm looking for divergences. So there's two types of divergences. There's bullish divergence and there's bearish divergence. So I'm always on the lookout for where these divergences are taking place. And I love to track 15-minute, 30-minute, 60-minute charts, and I love to look where there's possibility of warning signs, either a small topping out scenario or a potential for a small bottoming out scenario. And the reason why I'm saying small is because I'm using 15, 30, 60-minute charts. Obviously you're not going to get a monthly signal by looking at the 15 or 30-minute chart. You're going to get a short term trading look. You're going to get a small window, an opportunity to look at what the indexes are doing for a short term, maybe like a week or less. If you're using 30-minute, 60-minute charts, your time frame or your trading time frame would have to be 7 days or less, 2, 3, 4 days. Maximum is how I personally would suggest someone who's trading the 15 or 30-minute charts to take a look at how a potential scenario if might play out or not. But as you can see, guys, here, just let's get straight to it. Here's the price action in the SPY over the last, let's say 30 days. Okay, and as you can see, guys, here I emailed this chart, this exact chart you're looking at right now. I emailed it to artoftrading.net subscribers. When I started to notice the SPY was starting to act a little bit, it kind of gave this little head and shoulder type pattern here. See that? We had a nice little run up here, and then the SPY pulled back and then quickly made a nice 2-3 day bounce here, and it topped out around the 141.60 area right here. And as you can see, guys, it came back down and it gapped down right over here. Whenever you see a big gap down like this, or whenever you see a big gap up like this, these are usually times to really pay attention. You really have to, you cannot be complacent or ignore whenever you see gaps like this. So when you have a big gap up here, it was time to pay attention, because as you can see here, it gapped up, and the SPY held up, and it rallied for for a few more days. And as you can see here, guys, it gapped down over here, and as you can see, eventually, SPY continued to tank. But what I want to talk about here real quick is why I was very, very suspicious, of the market the minute we saw this gap down and then a rally attempt here that started to fail. See that we had a gap down, and we had a gap fill literally. You can see here we had a gap here. It gapped down, touched some support area around here, and then it bounced, very weak bounce, and it filled the gap right over here, and then now started to roll back down. So right away I saw this pattern, and I emailed it to artofTrading.net members, and I said, hey, folks, be very careful right now with long positions, because what we're seeing right now is a potential head and shoulder top. So we had a high here, we had a higher high here, and we had a lower high here. But what really made me very wary about this is that we started to see what I mentioned earlier, the divergences. So we started to see a bearish divergence start to kick in on the RSI and the MACD. So as you can see here, we had a high here around that 141.6 area, and as you can see, we had a top. But check this out, we had an RSI even though the SPY made a higher high over here. See that? We had a high here, we had a second high over here. RSI did not confirm. So you see that? So it made a high over here to confirm this one. But then on the second attempt, on the second market rally attempt, the RSI gave us a lower high right here. And check this out, MACD gave us a high signal over here as the index made a high right over here. So MACD confirmed it. So all is good as far as I'm concerned here. Now here's where things get iffy, is that MACD made a lower high. You can see how this high over here on the MACD is lower than this one. So now you have a downward sloping MACD now. See that? So it's downward sloping as the index is making a higher high. So to me, this is a bearish divergence. Okay, so now it's time to be very, very careful with long positions. And I suggested to artofTrading.net members to move to cash at this point. The minute we saw this right here, to move to cash. Now, head and shoulder patterns, lately they haven't had a very, very nice reliability. They haven't had good reliability success, So, but when the MACD and the RSI confirm what could be a head and shoulder topping pattern, it's time to pay attention. Obviously, it's nice to think, that not every head and shoulders is going to work. Obviously, but however, when you start to see multiple lines of evidence pointing to a direction that we need to be very careful going forward, because you know you know just because the head and shoulder is there doesn't mean the index is going to top out. You could easily break down here and then move and then rally back up to new highs. We've seen it happen so many times. But when you start to see evidence like, we have a lower high on the RSI, we have a lower high on the MACD, it's time to pay attention and at least, just get into a defensive position. This way, in case the head and shoulder confirms and we do see more declines, you're not going to get hurt by being too stubborn. Okay, so that's one thing I will never overemphasize. Is never ever, take any setup or any technical pattern for granted, because if the warning signs are there, make sure that you act up on it, and just that you get defensive. It's better to be safe than sorry, as they like to say. So as you can see here, guys, we continued to tank here for a few more days, and then what I started to notice now is we had a situation where we had the exact opposite of what was happening here. So here we had a bearish divergence where the index made a higher high with the momentum indicators making lower highs. See that? So now we had the exact opposite scenario. We had a bullish situation here. We had a bullish divergence. Now what does that mean exactly? So now you can see here we started to tank on the 30-minute chart. We started to drop lower. And as you can see, guys, here we had a low here on the SPY, which confirmed here by the RSI and the MACD. See that? So we had this low here was confirmed by the low on the MACD and the RSI here. And then check this out, guys. We had a then the very next day the market gaps down, sells off. But check this out, folks. Now look at this. Now we're having the RSI is starting to show a higher low over here. So we have the SPY making a lower low, but the RSI is making a higher low. And you can see here, same thing with the MACD. These momentum indicators are telling me now, even though the SPY is tanking, the momentum on the downside is not being confirmed by these indicators, by the MACD and the RSI, as hinted here by the higher lows over here. So that tells me that any decline that we see from here onwards should be seen with a suspectful eye. So be very, very wary of short squeezes. So if you're thinking about starting a short position here and you're seeing RSI do this, as the SPY makes a new low and RSI is making a higher low, MACD making a higher low, and you're thinking about shorting now, and I actually did get emails and then chat room traders asking me, hey Stewie, should we short here? My answer was no, no way, do not short here. And as you can see right away, guys, we got a snapback rally here. I mean, a decent sized snapback rally. It wasn't huge, but it was decent enough where if you put on shorts here, chances are you would have got squeezed out of your positions. So you have to be very careful and not take these indicators for granted, guys. Okay, so as you can see, we had here a move down that was not confirmed, and therefore that told us that there was a bullish scenario happening here. So right away I started looking for long positions when I started to see this. And then the very next day, guys, look at this, guys. So we had after the rally here, we had another failed attempt by the bears to bring it down, because the very next day we gapped down here. They tried to follow through on the downside, but look at this, guys. We had even more action on the upside with the RSI and the MACD. So you can see we had a first attempt that was confirmed here, a second attempt that was not confirmed, and now we have even a third attempt that was yet not confirmed for the third time on the MACD and the RSI. Okay, so that told us that there was an opportunity for a bounce here. So this opportunity is still in the works, guys. Okay, so we tried to bounce for a few days. The bounce was pretty weak. It's not the ideal kind of bounce. You don't want to see bounces where the index will make an attempt and then roll over, because eventually what's going to happen is the MACD is going to recycle higher, RSI is going to recycle higher to work off this oversold condition on the SPY. And then in a few days, if the bulls are unable to take us much higher from where we are now, eventually the index is going to start rolling back down again. So we have to be very, very careful here. So now going into next week, here's what I would be on the lookout for. I'd be lookout maybe for, let's say, one more attempt by the bulls to take us higher, and then maybe if we fail, drop down here. Let's say we fail on the SPY. Let's say we make even another lower low on the SPY. I can just imagine sentiment is going to be very, very negative at this point, because here we have a potential low point here. We have a potential, maybe a start of a low, maybe a short-term bounce in the works. And what would happen next week if we break down, let's say Monday, Tuesday, if we break down below these lows here, right? Let's say a big gap down on Monday, or Tuesday we see a reversal down, further down here. Now, what I would be watching out for at this point, as the SPY makes a new low here, watch how the MACD and the RSI behave. If the SPY makes a low here, but then MACD drops to, let's say, here, and then reverses, starts to make yet another higher low. So we have a low here, a higher low over here. If MACD makes another higher low over here, same thing with RSI. If RSI makes another higher low in this point, as the SPY makes a lower low, so at this point I would be very, very careful that we could have a situation where we have a failed bearish attempt, yet another one, and this one would actually be a pretty big one in my book, because now you have 1, 2, 3, you have a third failed attempt by the bears to bring it down. If they fail to do this on, let's say, Monday, Tuesday, I'll be very, very careful and look for a big, big snapback rally. So that's how I use MACD and RSI. I use them mainly as as momentum indicators to tell me whether momentum on the upside is slowing down or whether momentum on the downside is slowing down. Because as you know, when momentum on the upside starts to slow down, now you're looking at a potential pullback or a topping out scenario. And vice versa, when you see momentum on the downside start to slow down, that tells you that the sellers are getting less and less aggressive, and hence pointing to a short-term bottom or a potential bounce. So this is how I use them. So I hope it makes sense, and I hope this video, I'm sure it was very long. I don't know how many minutes it was, but I'm sure it was very long. But I just want to make sure that I really explain how these indicators can be very useful in detecting potential changes in momentum. So I hope this helps, guys, and as always, I'll make more videos and explain more techniques that I use every day here at theartoftrading.net. Okay, good luck next week. Take care.